Hi there, my name is Brandon. I'm the financial analyst at AWC Investment Group. I'd like to welcome you to our financial education channel, in which we're going to learn strategies which can be useful in our trading careers, whether in Forex or the stock market. The purposes of this video is to explain to new or beginner traders what Forex trading is and how you can become a better trader. Wasting no time, let us define the Forex market. The term Forex is a combination of two words, which are foreign and exchange. Foreign exchange simply describes a process of changing one currency into another. There are many reasons to change a currency. It could be either for commerce, trading, or tourism purposes. The Forex market is the largest marketplace in the world, and the trades that happen in it affect everything from the price of clothing imported from China to the amount you pay for a drink in Nigeria, Kenya, or Mexico, actually in any part of the world. According to the Bank for International Settlements, which is a global bank for national central banks, the daily traded volume in the FX market or the Forex market was around 7.5 trillion in 2022. The key word to note is daily. This is a daily volume of 7.5 trillion, or maybe around on other days it could be 5 trillion. But this is a high volume of money which is traded on a daily basis, making it the largest marketplace to be part of. Our next aspect is Forex trading. At its simplest, Forex trading is similar to the currency exchange that you may do while you're traveling to a different country. A trader buys one currency and sells another, and the exchange rate constantly changes based on supply and demand pressures in the market. This information then appears in the form of a candlestick pattern, a downtrend or an uptrend on your trading platform MT4 or TradingView. A vast majority of trades in the Forex market occurs between banks, fund managers, and multinational corporations. These traders don't necessarily intend to take physical possession of the currencies themselves. They may simply be speculating about or hedging against future changes in the exchange rates. For example, a forex trader might buy US dollars and sell euros if they believe the dollar will strengthen in the future, and therefore allowing them to buy more euros in the later day or in the future. Meanwhile, an American company or corporation can also implement a similar trade, which tend to have a big impact on the market, creating engulfing candles or changing the momentum in the market. For instance, in this case, for a particular pair Euro to USD. Currencies are traded in the foreign exchange market, a global marketplace that's open 24 hours a day from Monday to Friday. All forex trading is conducted over the counter, meaning there is no physical exchange which is responsible for carrying out these transactions. Like we mentioned before, Meta MT4 or TradingView, you can be able to buy currencies and trade them. Other major currencies to consider or popular currencies are the Japanese yen, the British pound, the Australian dollar, the Canadian dollar, the Swiss franc, and the New Zealand dollar. All forex trading is expressed as a combination of the two currencies being exchanged, known as pairs. The major pairs which account for 75% of trade in the forex market are Euro USD, USD Japanese yen, Great British pound to USD, Australian dollar to USD, US dollar to Canadian dollar, US dollar to Swiss franc, New Zealand dollar to USD. Each currency pair represents the current exchange rate for the two currencies. Here's how to interpret that information using Euro USD as an example. The currency on the left, the euro, is the best currency. The currency on the right, the US dollar, is the court currency. The exchange rate represents how much of the court currency is needed to buy 1 unit of the best currency. As a result, the best currency is always expressed as 1 unit, while the court currency varies based on the current market conditions, the exchange rate, and how much is needed to buy 1 unit of the best currency. If the euro US dollar exchange rate is at $20, meaning that 1 euro buys $1.20 US dollars, isn't it? Or put it in another way, it will cost $20 to buy 1 euro in simple terms. When the exchange rate rises, that means the best currency has risen in value relative to the court currency. And conversely, if the exchange rate falls, that means the best currency has fallen in value. The next aspect is on ways which you can trade Forex. There are three different ways to trade Forex. The first one is the spot market. This is the primary Forex market where the currency pairs are swapped and exchange rates are determined in real time based on supply and demand forces. Then two, the forward market. Instead of executing a trade now, Forex traders can also enter into a binding private contract with another trader and lock in an exchange rate for an agreed amount of currency on a future date. Then the third one is the futures market. Similar, traders can opt for a standardized contract to buy or sell a predetermined amount of currency at a specific exchange rate at a certain date in the future. This is done on an exchange rather than privately like the forwards market. The last aspect on our video is on how to start trading Forex. Trading Forex is similar to equity trading. Here are some steps to get yourself started on the Forex journey. Learn about Forex. While it is not complicated, Forex trading is an undertaking that requires specialized knowledge and a commitment to learning. Secondly, set up a brokerage account. You will need a Forex trading account at a brokerage to get started with Forex trading. Thirdly, develop a trading strategy. While it is not always possible to predict the market movement, having a trading strategy will help you to set broad guidelines and a roadmap for trading. For instance, you only trade when the market has met your confluences. Your confluences are simply the tools that you use to trade. For instance, maybe you use moving averages, the relative strength index. Those are the confluences. Or even a trend line also. And then another thing to know, always be on top of your numbers. Once you begin trading, check your positions at the end of the day. Most trading software already provides a daily accounting of trades. Make sure that you do not have any pending positions to be filled and that you have sufficient cash in your account to make future trades. And lastly, cultivate emotional equilibrium. Beginner Forex trading is fraught with emotional roller coasters and unanswered questions. Discipline yourself to close out position when necessary. We'll talk more on how to master the trading psychology, which also talks on how to deal with your emotions when trading. When trading, the most important thing is to Never trade on your emotions. That's why we said you need to have a trading strategy, which you should follow if all your confluences have been met. Whenever your confluences have been met, you may implement your trade. It's not a guarantee that the market will always move in the direction that we want, because sometimes the market can be manipulated by retail banks, institutions. So it's better to always also set a stop loss just in case. So all this you'll be able to come up with when you're working on your trading strategy. Thank you for joining us, and please like and subscribe.